Hey, puppy trades. I had to do it slow. You can hear it in my voice. It's been quite the week. What happened with the Russell this week? Man, I think you guys tapped into some magic powers because we're gonna go over some stocks that I got right, but a lot of them you guys requested. So the small caps were a big theme this week. That's what this video is going to be about: small cap, mid cap, and micro cap ETFs. And I hate to compare anything to PTSD, but I got a little bit reading this. So this video is for parody, for entertainment purposes only. I'm not expressing the views of anyone in this video besides myself, and those are just for entertainment purposes. But I read this. And it just made me. It made me remember late 2020, the fall of 2020, the winter of 2021, and that was the rationale that we'd seen these mega cap stocks. What Molly wants a cracker say. July 10th, SRTY. Never thought this would be a large short position shorting the Russell 2000, but it is because the blow off top rally is narrow in mega tech. I figured I'd hang my hat here, right? So one of my followers had asked me, about IWM, and so I posted about it and told them what I thought, which we'll go over in this video. And then another one asked me what I thought about TNA, which was a leveraged ETF, and I told it was the bull leveraged ETF for the small caps. And what I told the person was that I thought an institution would be more likely to buy leap puts on a ETF that shorts the Russell 2000 with leverage than to buy one. So that leveraged ETF, buy one that then to buy one like TNA that bull leverages the ETF. What an institution's probably going to do instead is they're going to buy leap puts on an ETF that shorts the Russell 2000 with leverage. So they're going to short a short ETF and take advantage of that leverage decay. And they're going to use a put option so they don't have any margin or collateral risk like that. So I was looking at SRTY, and I noticed that this person kind of had the same rationale that a lot of bears had in December, November of 2020, early 2021. A lot of what was being heard with shorting the small caps was, hey, mega cap tech has exploded, right? So the smaller companies, they're the weaker companies, right? And I'm not saying that this is this person's theory at all. Okay, I'm just saying I saw this. I saw this on Stock Twits, and it really stuck with me because I did hear a lot of that in late 2020 and early 2021. And so a few years later, another election's coming around, and all that uncertainty about the change was kind of also adding to the dramaticness of how could anyone even think about longing the Russell here, especially with the indices so high. Everyone's predicting they're going to crash most likely. And so what's going to be going on with these? Before I get into it, and the Russell, the micro caps, and the mid caps, what we've seen in the options market recently, I sold AI I sold AI today, and the reason that I did that was to clear up capital. It's not because I think that AI is going to stop performing well. So I sold AI, and I also sold an ETF HIGH that holds 3-month treasury bills and then sells credit spreads. The reason I sold the latter ETF was because there's a better ETF, in my opinion, THTA from SoFi. So that's based on the back testing of those ETFs on ETF Total Return Calculator. And speaking of that calculator, AIYY was the Yield Max ETF that runs the synthetic out of the money covered call strategy on AI. And so it has not performed well on the blind average test. I thought that because AI had pretty high implied volatility, that it would be pretty well, do pretty well, even though AI hasn't really necessarily been down. It's really been kind of even. The total returns on the blind average test are negative 18%. if an equal position had been taken every month. So I'm looking for a little better than that, and now a new ETF that kind of accomplishes the same goal from the company that made FEPI that I invest in, that buys the 15 best big tech stocks, and then they sell out of the money options. They have an AIPI ETF that does that with just AI growth stocks. So I'm going to probably use that ETF to get the same goal that I wanted with AI. And I also own NVDY, which has a little big connection with AI in this sector, the GPUs and all this. So I have a really nice winning position on that, the leader of the sector. And so I think AIPI is going to do a better job than AI mixed with AIYY in getting me those dividends with the stocks I expect to play catch up with NVIDIA. So this is wave one and wave two. I think this is another wave one and an ABC wave two above 23.46. I'm expecting a large wave three is going to begin before a shallow wave four and a wave five higher. So it's at 29.68 right now, right below 30. I think 23.46 is a good invalidation. 1, 2, 3, 4, and 5. That equal X target is 53. It could go all the way up to the 60s before a shallow wave 4 and a wave 5 higher. Those 5 waves could just end a wave 3 before a shallow wave 4 and a wave 5 higher. So I did sell a stock that I'm bullish, but I'm going to try to get into AIPI, AI and AIYY. I took that new fund risk. It didn't work out. But I also wanted to clear up capital. I've got something special I'm going to show you guys later. I'm going to make sure that I get into that position nice and good too. So anyway, before I do that, unusual, and that's just to make sure that I'm talking my book. I'm not going to be moving a market or anything. I'm talking about large cap ETFs. Definitely not anything that could move a market or anything like that. No small caps are coming. I'm going to take the money that I sold AI and some other stuff with, like HIGH, and I'm going to put it in to some of these large cap projects. Make sure I'm positioned so that I'm not telling you guys something that I'm not doing myself. It's a little bit of a secret, but I promise they're large caps. This channel with 4,780, it's related to Tesla. Okay. Anyway, unusual stock options volume. Let's look at some of these. I mean, small caps have been trending. SoundHound was trending. It's too bad it only had. I mean, this was an interesting one, right? So 3 weeks ago, I posted about how SoundHound and Celsius both put in tops right before the first quarter ended. The second quarter began. They corrected all quarter for the second quarter, and institutions were buying straddles before the third quarter. So I was like, hey, it looks like before the third quarter, these stocks are going to enter wave three. And institutions were buying the 4-strike straddle on SoundHound. Now it's at 6.20. So they made money on the long gamma position. Of course, they probably bought the 5-strike, the 6-strike. They're going to ride this chain all the way to, I mean, we'll see, right? They were buying straddles on this stock. Then it has a huge move after an announcement with Stellantis. So that's called actual insider trading, by the way, if you were wondering. Anyway, 1, 2, large wave 3. I just casually caught the insider trading on SoundHound and IMAX Corporation. That happens all the time on this page. We got 4,780, subs and 25,600 followers, and we're catching, insider trading in the act. And no one really seems to care. So I'll just keep going on. 1, 2, large wave 3, shallow wave 4, and a wave 5 that ends with Momo. Wave 1, wave A, wave 2, wave B, 1, 2. I point out they're buying straddles before the third quarter. Then we get this crazy move off the announcement. I did the exact same thing with IMAX just a couple weeks ago before another huge partnership. And I've also recently done that a week before a Dogecoin partnership was announced with Tesla. So that's pretty interesting. And exactly a week later, Dogecoin went up 25% in a day. Anyway, those were just the partnerships. Those were just the partnerships. Oh, Kodak. Kodak. People actually got arrested for insider trading on Kodak stock um, for preferred securities. So that's the fourth one. I saw that one and talked about the options and the straddles being bought before that one too. So that's four in the past 3 quarters. Yeah, we're catching insider trading on a mass scale about a little over once or twice a quarter. And that's just the ones that I'm taking the time to point out, and I don't even read the fundamental stories. I mean, they probably happen all the time. Anyway, yeah, holler at me. I'll help the SEC enforce some of this, but they don't. It's not about that. 1, 2 wave. I mean, come on. It's called an unfortunate truth. Anyway, you guys know what I think is going to happen to SoundHound. The 96th of you who watched that video do. Joby Aviation, another one. I mean, was this a partnership? I mean, this reminds me of TSLL. Look at this. These time fibs. You guys thought I was just going to share these time fibs and, not make you read any of my dumb poems? Come on now. I invented this. I literally invented this. 1, 2, 3, 4, 5. Large wave 1, wave A, B, C, wave 2, wave B. I connected the beginning of the small wave 1 with the high wave 1 right at the 13-week time fib. Boom. Boom. Anyway, go look at some of my other posts about TSLL recently. If you live in Houston, I had a picture of J.J. Watt and Deshaun Watson up there for some reason, and next to a picture of 5 cats in early or late June. Anyway, I'm just an artsy fartsy dude. Anyway, Joby Aviation, 1, 2, wave 3, 4, 5. Large wave 1, wave A, B, C, wave 2, wave B. I connect the time fibs, wave 1, wave A, boom, right there at the wave 3, the 3-week time fib. We see wave 3, wave C begin. What was that one? Archer Aviation. You guys got this one. You guys are out here introducing me to flying car stocks. Boom. I mean, go sign up to the guy who requested this one's Discord. God damn. I mean, really? This is from the bleachers. What was this story? At least I got this one from a follower. Jumia Technologies. What was this story? I don't even know. I was talking about this because it was on the straddle screen at 3. Yeah, I got it all written down. I still have the options notes written about how they were buying the straddles and strangles all the way down, buying against the puts, and then buying the 3-strike straddle on the way up. But what was the story for Jumia Technologies being up 300, 400% from when I noticed its straddles and strangles being bought? TerraWolf. I mean, these are just the ones that I thought were fun. 1, 2, 3, 4, 5. Wave 1, wave A. This is my completely untouched chart of TerraWolf. Wow. Perfect. I mean, absolutely perfect. You can just see it. Talking about the 2.5 strike straddle being bought and the 2-strike straddle being bought. TerraWolf and Jumia Technologies were in the same video. The third stock in that video was Upstart. No, it was Upwork. Upwork and Upstart. I'll have to get into. But this video is going to be about the unusual options volume. I'm going to stop using this screen and just see what you guys are requesting. I'm pretty sure half of those we just went through, you guys were like, hey, what do you think of this one? Anyway, let's look at some of these small cap ETF unusual options volume. This mid cap one was huge. This was about a almost $2 million trade for August. So we got the IJH, we got IWC. We're going to try to see if we can figure out when some of this music's going to stop playing for some of these ETFs. URTY, the Russell ETF, this leveraged ETF. Let's see what's going on here. Well, we have 83% unusual options volume. Yeah, 83, 84% unusual options volume. No, sorry, 85, 86% unusual. It's 85% biased to the bull side, and the unusual options volume is 465%. Let's go see what the leg was. It looks like it was for 2 weeks from now. So that's very interesting. Some guy is betting we're going to have a lot of fun going into the August 19th, sorry, the July 19th expiration. This guy was a little more safe with the mid caps. Look at how much money this guy spent. It's a $1.6 million call trade for the mid cap ETF, and then 7,000 times 35 for the out of the money legs for August 16th. So I'm going to try to give you guys when I think some of the music's going to stop playing. We're going to stick with this ETF to start. I think the microcap ETF is beautiful, but this had so much money spent. I want to just give you guys my opinion. I think when answering the question, when's the music gonna stop for the mid caps, I gave a really good answer in my opinion yesterday, and we'll get into that for this ETF just very quickly. The equal legs target is 78.23. I've gone over this count on a lot of different charts, but for anyone who's new, that equal legs target is this 5 wave subdivision from this low. Really, always, I mean, I hate to be the broken record, but this is what's going to separate the wave theorist from the wave BSer, just to be honest, is this RSI. Wave 1, wave 2 on the weekly. Wave 2 is retesting the 50. Wave 3 makes the highest high. Wave 4 retests the 50. Wave 5 ends with Momo. That's the 5 to look for. That's the 1, 2, 3, 4, 5 to get very used to looking for. So this is 1, 2, 3, 4, 5, wave 1, wave A. This is ABC, wave 2, wave B. So this is the 5-3-5 sequence in Elliott wave. 5 waves up, 3 waves back. It takes a little bit of practice with the eyes, but just 1, 2, 3, 4, 5, wave A, B, C, wave B. 1, 2, 3, 4, 5, wave C. That's called a regular flat. The length of wave A, placed at the wave B high, wave C ends right there, that 127.2% fib. I'll say for just kind of an average beta, that 127.2 is a very favorable spot for wave C to end. It's a little more precise than the 100%, which is the minimum target for wave C, wave 3. So that's 5-3-5. It's all about the fractal nature. 1, 2, 3, 4, 5 on the large degree, wave 1, wave A. So this is an A, B, C correction on the smaller degree, subdivided into 1, 2, 3, 4, 5, 3, 5. Now, wave 1, wave A, wave 2, wave B, and then from this low, there's a few ways to count it. The simplest way, I usually don't do expanded flats on my page, just because if I know it's an expanded flat, then there's no reason to really distinguish it for me personally, because it's the exact same implication. For the Elliott wave purist, this is an example where it probably is an expanded flat for this ABC correction. All that means is that wave B breaches the wave one high. So why do I not like to always talk about expanded flats on my page? It's very confusing to new wave theorists to be saying very commonly that wave one, wave A gets breached, and it's still the end of the correction. That's a very dangerous thing too, because what really happens? Well, what really happens is that people end up saying this for a long time. People will say this is a wave A, and so they'll say this is an expanded flat wave B, and they'll keep looking for crash, crash, crash forever. It's a very bad, very dangerous practice. So understanding that the implication is the same, if I don't call it an expanded flat, very important. When it broke this high, instead of looking for an expanded flat, the proper thing to do is look for the length of wave one placed at the wave A high. Sorry, the length of wave one slash wave A placed at the wave two slash wave B low to be reached for the wave three, wave C target. That's called the 100% or equal legs extension target. How are we going to get there? The more conservative way is to say this is 1, 2, 3, 4, 5. And that's going to take this ETF to 78. I think that it could get to 78 very properly. It couldn't quite get to 78 as a wave 5. So it could go 1, 2, 3, 4, 5, and that's a wave 1, wave 2, and it still keeps trying to trudge up to 78. That's probably not my bias. What I actually think, and this is why this wasn't my favorite ETF. It just had the most options volume from a dollar perspective, so I wanted to cover it. I think from a holistic market analysis, it's going to look more like this. This is wave 1, wave 2, and then within a large wave 3, this is a wave 1 and a shallow wave 2. We're going to go over a lot of shallow wave 2s in this video. $46.30 and 61.01. I'm looking for 53.66 to hold. It lines up with this wave 1 high of 54.75. And I'm going to look for 78 to be reached within not a wave 5, but within a wave 3 after a shallow wave 2. That's how it gets to 71 before a shallow wave 4 and a wave 5 higher, as opposed to a large wave 2 correction before a wave 3 to 78. So that's one answer to the question, when's the music stop for mid caps and small caps? Mid caps specifically, and this investor who bought a $2 million, on this, the 78 is the equal legs target. That would be one answer above 53.66. It's a pretty reliable 535 target. The equal legs target, very clean. 1, 2, 3, 4, 5. Very clean on the RSI. 3 waves back, another 5 waves up. Most likely has been confirmed with this high being broken. So we're going to look at more names on this list. IWC, 797% unusual options volume, 97% call bias. URTY, this leverage ETF, 467% unusual options volume, and we've got an 86% call bias So we're going to look at these ETFs. Notice also this junk bond ETF, 332% uh, unusual options volume, 95, 94% call bias. So we're gonna go over those two ETFs real quick. The mid caps, real quick. Just on the mid cap note, I like this. This is the Quality Factor mid cap ETF. I posted about it yesterday. One, two, three, four, five. It's really leading. The quality mid caps are leading IJH. That's another big thing. The quality mid caps are leading IJH very well. And this is a really interesting chart because what we just looked at, IJH kind of right here. Kind of right here still, we see the leaders in the mid caps appear to be giving a sneak peek. All right, this is the magic show. One, two, three, four, five. Again, glorious. One, two, 50 retest. Three, highest high. Shallow wave four, 50 retest. Wave five, Momo. ABC, one, two, large wave three in progress. It's subdivided into one, two, large wave three. Look at this beautiful highest high on the weekly RSI. Shallow wave four, ABC is actually a perfect wave four correction right before the 50% retracement at exactly the 161.8% extension of the length of wave A, placed at the wave B high, very clean. The bare minimum, that wave 3 high is getting broken. If wave 5 is the length of wave 1, placed at the wave 4 low, this is going to 118.72. That would be a scary wave 5, ending with momentum divergence. And that would be one answer to the question, when does the music stop? So let's get into these small cap ETFs. Micro caps first. IWC. Look at this long term count. I think this is very interesting. Very, very kind of breathtaking. And this is something a lot of people don't want to hear. It's why IWMY and the Royce Value Trust, some of these new ETFs that are trying to be better than RYLD, running the covered calls on the Russell, like IWMW and IWMI, are very interesting to me. Collecting premiums for life and compounding a sector that could be exploding for potentially a long time. I know that all sounds grandiose. I've talked about ARC a bit in this kind of thematic aspect, but IWC, the microcaps, very interesting chart because it's very clean. ABC correction. One, look at this again. Two, 50 on the RSI retested. Wave 3, highest high on the RSI. Shallow wave 4, the retest 50 on the RSI. And wave 5 ends with momentum divergence. Okay, that's 5 waves up. I believe this is wave 1, wave 8. And actually, I think this is just wave 1. We've had this large rally for this red wave 1, so we're going to have to debate what this is. Really, the only debate looks something like this. I'll get this. Before I get into my argument, the only debate, I think, is that this is wave 1, wave 2, wave 3, wave 4, and wave 5. And so this down here is not a wave 2, it's a wave A. You know, that bear potentially is looking for the 61.8% retracement to end wave B, the counter trend rally. I can just make it the 38.2 B, and they're looking for wave C. I guess there's a little bit of wisdom in that, you know, the 61.8% retracement looks like it's about 133. That's still a little higher, but anyway, I think that's bad wave theory. And a lot of those indicators, to be honest, are going to come from those ETFs that I just talked about. XMHQ, the quality mid caps, maybe not the best correlate, but looking at IJH, looking at some of the leaders, XLI looked extremely similar. XLF looked extremely similar to the small cap ETFs. There's a lot of financials, there's a lot of industrials in the small cap sector. Let's get back to the micro cap sector. In my opinion, I think this is a 5 waves up. This is an A, B, C correction. So one answer to the question, when does the noise end, is very hard to answer. Because I think this is a wave one. One, two, three, four, five, wave one, ABC wave two. I don't think this is one, two, three, four, five. And even if it was, it's a five wave sequence. Bulls are looking for the 61.8% retracement to end the three waves back, and it hit that with the 50% fib. Very interesting. I think that this is another wave one and an ABC wave two. So in the long term, IWC may be going all the way up to 195, and it's currently at 121. And the big possibility is that when it gets there, if it gets there, wave three, that's just the wave three minimum target in red. There's a shallow wave four in red, and then there's a wave five higher. And that just ends wave one. So I'll try to show that it's really kind of looking way too far down the road. But what if it looks something like this? And that's why these premium collections and the Royce Value Trust paying these dividends is very interesting to me, because a wave four correction after an all-time high would be shallow, but it could be lengthy before another wave five higher. And then what? That could just end this large degree wave three in black. So that's it's getting very advanced with the degrees in the subdivision. But one answer to the question, when does the music end, is not quite IJH hitting 78. It might be IWC reaching 195, and that might just be when the music pauses for long-term holders like me. And then what? Well, I'm not holding IWC directly, but things that are very highly correlated, individual stocks, options, and also numerous ETFs and closed-end funds that collect dividends and also sell premiums on these stocks that I frequently get into. So within the cycle from this low, to get a little tighter, I think 108.90 is a great invalidation. And that's where this short wave one and wave two look keeps coming across. It keeps coming up in these small cap charts. IWM, I talked about it before it happened. IWC, it broke this wave one high. And so I think 121.61, that was broken. The length of wave one placed at the wave two low on the weekly gives a red wave three up to 141. That might be a little more of an intermediate target. So 108.90 invalidates. The intermediate target is 141. There'll be a shallow wave four and a wave five higher. The real target though is 195. And the thing is, that could just be where a red wave three ends before a shallow wave four and a wave five higher. IWM, I posted about recently, requested by Jason and Jabroni, ABC from this 2018 high. 1, 2, 3, 4, 5, wave one, ABC, wave two, wave B at the 50% fib, and then from this low, wave one, wave two, again breaking this high. The 161.8% extension for the short wave three is 242.42 for the Russell. That equivalent equal X target is 309.74. Now the stop can be moved up to 191.34, and that's going to be So I'm gonna call that the moved up kind of medium invalidation now. The original one was 180.74. It's held above that. I think this is 1, 2, 3, 4, 5. Wave 1, ABC wave 2. So the minimum wave 3 target. It's not technically incomplete yet. IJH is technically incomplete to 78. I went over XMHQ also, and it can go to 118. So I do think that IWM is going to break this high, this wave 1 high of 244.46. That's when it technically becomes incomplete for the 5-3-5 sequence, and that's why getting in the habit of calling everything an expanded flat is very dangerous to wave theorists, because that's clearly 5 waves up and 3 waves back. So the expectation, anytime at any time, the market can crash. Elliott wave theory cannot work, and that's why expanded flats and expanded triangles exist. That's also why wave theorists have the rule that the corrective waves, whether it's a bear market or a bull market, aren't supposed to be traded. They're supposed to be prepared for. Those are really kind of the 3 rules that stop Elliott wave theory from being the magic show. But there are rules, and the expanded flats, call everything an expanded flat rule. I don't think that's going to work for IWM until it's in the low 300s. But by that time, it's going to be way too late. Real quick, I wanted to have some fun. You guys are having fun, so let's have some fun. Let's actually be boring real quick. Real estate has been moving up with the Russell, and it's very sad. It's the saddest story ever when the market's real giving and all the retailers just run to the crap that is gonna have these big pops, but unless they're the pros, they're not gonna know how to realize and capitalize on those gains and really make the most out of it. And then what happens during these more giving cycles, the backbone of the economy, what really, people's bills are coming from, and instead of getting dividends from that, they're holding some micro cap, gains. Hey, 200, 300% gains are cool, but what's really going to be cool and more consistent most of the time, especially to the retiree, is the dividends. And so as these yields dissipate, it's not just the bond market, the real estate market is something that I particularly, and a lot of people, they complain about housing prices, and their housing market analysis is wishful thinking. It's wishful thinking. It's not accurate. I've destroyed the home building sector, and it's by far the most bittersweet sector. I hope the precious metals and the commodities don't try to change that. But real estate, following the home builders, is going to be a big theme. So I wanted to be the stickler about it real quick. 1, 2, I invest in this ETF, closed-end fund, RQY wave 3, 4, 5. Again, beautiful on the RSI. Wave 3 makes the highest high. Shallow wave 4, wave 5 ends with Momo. A, B, C correction, very pretty. Look at these time fibs too. If I measure the beginning of this week, this wave 1 low on the weekly with the wave 1 high, and I connect it, look where wave 2, wave B ends. Wow, what an amazing coincidence. The exact same length in time as wave 1, wave A, wave 2, wave B ends. I'm sure that's not a pattern that skilled wave theorists are going to notice forever, thanks to me. But anyway, wave 3, wave C could be in progress until the length of that time as well, and that can be found by taking the length of wave 1, placing it at the wave 2 low. I believe RQI is going to go all the way up into the 20s. I'm going to keep holding it, but I did notice this ETF has been rallying with the small caps, and that's one where Middle America, they've got to figure out what that's going to mean for them. It would be my unprofessional analysis. Let's have some fun. This MM had some fun with this leveraged ETF. What's this MM thinking? I'm just going to get into, you guys asked for the magic show. This is kind of as magic as it gets, doing wave theory on leveraged ETFs. But I've noticed the institutions, right? They always tell the retail traders, and they got it in the prospectus, so they gotta listen to it. Oh, don't hold leveraged ETFs for more than a couple days. Don't, it's only to track 1 day. I mean, they've got it in ZIVB. They're advertising they pay a monthly dividend. I think this is honestly like marketing, like law being broken. But ZIVB, I'm going after insider trading in this video. Now I'm going after marketing law. I'm just getting all my ZIVB. Look up that ETF. It's ridiculous. It's ridiculous. I'm kind of mad. No, okay, no ZIVB. They're advertising monthly dividends, right? Monthly dividends. What do you mean monthly dividends? Means you hold the ETF and collect monthly dividends, right? It's an income vehicle. And no, they got all throughout their website, all throughout their prospectus. Don't hold this ETF, for more than 8 hours, right? This is for sophisticated investors to track the VIX -4 to 7 month, futures index. And they got it all in their prospectus, all over. But in giant bold letters, they're like monthly dividends, monthly dividends. How is someone going to collect a monthly dividend if they can't hold the ETF for more than 8 hours in the prospectus? I mean, that to me that's false advertising, right? You're saying, hey, monthly dividend, monthly dividend. How do you collect a monthly dividend if you can't hold an ETF for over 8 hours? Are you advertising that this ETF is only supposed to be done with dividend capture once a month? I didn't read that in the prospectus. Anyway, I don't know what that was. 37.54. I'm looking for that to hold. What do you do? A pretty short term. But yeah, 1, 2. Look at this. Wave 3, highest high on the RSI. Shallow wave 4, wave 5 ends with Momo. A, B, C correction. Small wave 1, wave 2, wave 3 beginning. This and what I did with TSLL, it's called harvesting the beta. What I did with Joby and Archer Aviation and Soundhound and hopefully the rest of IWM. That's called apparently the Magic Show.